Hello, good morning. For this session, we are to talk about your investment in equity securities, particularly the subsequent transactions. So, what subsequent transactions should we account in this particular session? So, we will discuss the accounting for your dividend income. We will also discuss the accounting for your special assessments. We have also your stock splits and your stock rights, including the derecognition or sale. So our topic will revolve around these items. First, dividend income, and then special assessments, and then we go with your stock splits, stock rights, and your derecognition or sale of your equity investments. Before we proceed further, let's just have a recall on how to account for your equity investments. So under your equity investments, we learned before that we should account it under FVTPL or FVTOCI under your PFRS 9. Now, problem arise if ever that equity investment cannot be measured under fair value. So there is no known fair value. You cannot already measure the amount of the investment. How should we measure it? So in case there's no known fair value, how should we measure it? Because FVTPL and FVTOCI, of course, is based on the fact that fair value can be reliably known. Now, what happens if your fair value cannot be reliably known? If the fair value cannot be reliably known, then we should measure this one at cost. So initial and subsequent measurement should be at cost. Initial and subsequent measurement should be at cost. Now, in case our initial measurement and subsequent measurement will be at cost, how or what is the effect of your impairment? So under FVTPL, FVTOCI, remember, we do not have any impairment. But here, since we are measuring it at cost, we can have your impairment. So how do we compute for your impairment? Your impairment should be compared as to the carrying amount or the cost versus the recoverable amount. So what is the recoverable amount here? The recoverable amount here should be the present value of future cash flows. The present value of your future cash flows. We compare it as to your carrying amount. Sir, how about value in use? Should we not use the higher between present value future cash flows and value in use as your recoverable amount? Generally, we do not use value in use for your investment because we do not actually use it unlike your property, plant, and equipment. So in here, we just look into your present value of your future cash flows. So we just compare that, the recoverable amount and the carrying amount. You already know this one. And we have your impairment loss. So in case your equity investment cannot be measured under FVTPL or FVTOCI under PFRS 9, you can measure it under your cost method. So in instance that there is no FVTPL or FVTOCI, purely you can make use of this in your practice. But as to our problems, normally we only use FVTPL or FVTOCI. Now, before we proceed further, we talk about your different level of ownership as to your equity securities. So we have these different percentages, 0, 20%, 50%, and then 100%. So we have here 0 to 19%, 20 to 50%, and then we have your 51 to 100%. So what is this level of ownership? Whenever we talk about level of ownership, remember that your common stock gives you ownership interest. Common stock gives you ownership interest. Remember, she is defined as your residual interest over the assets of the business. And this residual interest vests upon on your common stock. So to compute for your common stock ownership interest, you get for the total common stock held divided by total outstanding common stock multiplied by 100% to compute for the level of ownership or percentage of interest Now, after we determine the percentage of interest, then we can say and we can group them according to the type of investment for equity securities. Take note, guys, that we only compute your ownership interest basing on your common stock and not on your preferred stock, solely on your common stock. Now, after we determine the level of ownership, we look as to your type of investment. So what is the type of investment in case the ownership is 0 to 19%? So this is known as your investment in equity securities or your FVTPL or FVTOCI investment. If your ownership interest is 20 to 50%, we call this one your investment in associate. If your ownership interest is 51 to 100%, we call this one investment in subsidiary. Now, basing on this type of investment, we can also determine the level of influence. So, as you can see, we have here your different percentages, which now also signifies the level of influence of one particular investor as to the investee. So take note, we as the investor here determine the level of ownership, whether we have 0 to 19, 20 to 50, or 51 to 100%. Now, on the level of influence, if you have 0 to 19% ownership, it means that you have no influence or little influence only. So when we say influence, you participate with the policy-making process of the company. You are maybe one of the board of directors. You control the company. So those are different types of influence. When we say you have no influence or little influence, you don't have any say on the policy-making process of the company or as to any decisions of the corporation. Next, if we have 20 to 50% ownership, it means that you have a significant influence. So in here, you can already demonstrate that you can already participate with the policy making process of the company, or at least you have already a voice on the decision of the board. Next, you have your 51 to 100% ownership. If you have 51 to 100% ownership, your level of influence is already known as control. So meaning you already control the corporation. You already control the corporation. Now, based on your investment or type of investment, we can determine also the standard applicable. So for 0 to 19%, the standard applicable is your PFRS 9. Also, your PAS 32, including PAS 39. Now, for 20 to 50%, what we use is your PAS 28 as a standard. This is known as your investment in associate and joint ventures. We have your investment in subsidiary 51 to 100%. The standard use is PFRS 3, including PFRS 10. Now, as to the valuation using the standard. So under 0 to 19%, the valuation applied is fair value method. But in rare instances, we can use your cost method in case the fair value cannot be measured. Next, you have your 20 to 50% under PAS 28. The valuation method used is known as your equity method. And on 51 to 100%, the valuation use is known as your consolidation. It's known as your consolidation. Now, maybe you are thinking, what if the ownership is 50-50? Should we measure it as investment in associate? So if ever there is a joint control. So for example, we have 100% ownership. We have three owners. And these three owners joint control 33, 33, 33. Okay? So that can be a joint control. So in this case, we only have two parties, 50-50. So that is still a joint control. If you have a joint control, that is the type of influence. So the level of influence is joint control. We call the investment as investment in joint ventures. Investment in joint ventures, or at some point, it is also known as your joint arrangements. So why is it known as joint arrangement or joint ventures? Because here there is already a contract which states a joint control over one entity. So you control the entity pursuant to that contract of joint control. Kaya joint arrangement. You arrange to jointly control one investee. So in that investment in joint ventures, remember the level of influence is joint control. So what standard is applicable? We still use up to now PAS 28, but we have a new standard which is PFRS 11. Now under PAS 28, what is provided is equity method. But in your PFRS 11, it provides for two methods. That is your equity method and your proportionate consolidation method. So what is the difference of a consolidation and proportionate consolidation? In your consolidation, investee plus investor will give you the FS. That's proportionate consolidation. So 100% of that you combine. We call this FS as consolidated financial statement. Now, what is the difference for a proportionate consolidation? So we still have your investor because you are the investor. This is your FS. So 100% of your FS will still be placed. And as to investee, only your ownership interest in the investee. So for example, the investee has the cash of 30 million. You as the investor has the cash of 100 million. And let's say you have 50% ownership over the investee. What we do is we just get the 50% of that cash. So our FS will present cash of 115 million. If that is a proportionate consolidation, you only get or consolidate proportionate to your ownership interest. But if that is consolidation, what we do is we add the two items. So for example, investor has 30 million cash and investor has 100 million cash. We combine the two, regardless of your ownership interest. So 130 million. So in proportionate consolidation, we take a look on your ownership interest. In consolidation, we do not look into your ownership interest. We consolidate the financial statements, meaning we do not get a proportion out of the investee's assets, liabilities. Okay, so that's the difference those are the differences on your investment in equity securities. Therefore, if you are confronted with investment in equity securities, you may answer four types of problem. And what are those problems? So problems relating to fair value method under PFRS 9, and then a problem relating to equity method under PAS 28, or a problem regarding equity method for investment in joint ventures under PAS 28, or a problem regarding joint control under PFRS 11, or a problem regarding consolidation under PFRS 3 or PFRS 10. Now, the focus of Intermediate Accounting 1 will be the investment in FVTPL or fair value through profit or loss or investment in FVTOCI or fair value through other comprehensive income. So that's one topic under IA1. Another topic under IA1 will be your investment in associate. So we will focus ourselves into these two types of investment. Investment in fair value and investment in associate. But the two other types of your investment will be discussed in your advanced financial accounting and reporting. So this is like advanced intermediate accounting. So in your FR, you will discuss now your joint arrangements together with your business combination, particularly investment in subsidiary. So those are the topics that we will discuss here in IA1 and the topics that you will discuss soon in your FR. So our focus, investment in fair value and investment in associate. We're done with this. This will be our next topic. Okay, so let's get down to our real topic for this session. So our topic for this session again relates to subsequent transactions. Subsequent transactions. We start first with your dividend income. We start first with your dividend income. So in your dividend income, you as an investor will earn an income out of your investment in equity securities. And that income is known as your dividend income. Dividend income. So what we need to look here in your dividend income, of course, will flow into the measurement of your dividend income. And after we measure that dividend income, we look into the effect of the dividend income as to income per se, effect of that dividend as to the cost of the investment or the carrying amount of the investment, effect of that investment or effect of that dividend as to the number of shares and the cost per share. Okay. By the way, your dividend can either be a dividend out of earnings and a dividend out of capital. If the dividend is out of earnings, of course, the dividend is known as dividend income. While a dividend out of capital is known as a return of capital. So, a dividend out of earnings, take note, is recognized as dividend income. If that dividend is out of capital, it is considered a return of capital. So, in this particular topic, we need to determine what items of dividend should be considered as dividend income and what items of dividend should be considered as return of capital. So the start, first we have your cash dividend. So in a cash dividend, you will receive here a cash. The dividend that you will receive here is a cash or money. Now, how should we measure your cash dividend? We measure your cash dividend as to the amount of cash dividend to be received. Take note, in accounting for your dividend income, we have your three important dates. We have your date of declaration, date of record, and date of payment. We record on the date of declaration. We record on the date of declaration. On the date of record, it means that the corporation who will issue the dividends will formally attach the dividend to you as the investor. So still remember, I hope you still remember these three important days. And then we have your date of payment. In your date of payment, we are already receiving the amount of our cash dividend. So again, we measure our cash dividend at the amount of cash dividend to be received at the date of declaration. Now, guys, as to this particular type of dividend, again, we need to determine the effect of this dividend as to dividend income, effect of the dividend as to the cost or carrying amount of the investment, the effect of the dividend as to the number of shares, and the effect of the dividend as to your cost per share. So what is the effect of a cash dividend as to your dividend income? The effect of a cash dividend as to your dividend income will increase, cash dividend will increase your dividend income. A cash dividend will increase your dividend income. Now, for the cost or carrying amount of your investment, it does not affect your cost or carrying amount of investment, nor the number of shares, nor the cost per share. Why? What are the entries? At the date of declaration, your entry will be debit dividend receivable, credit your dividend income. At what amount? Again, we measure it based on the cash dividend to be received. And then at the date of record, we will not make any entry. And at the date of payment, we will now record an entry as to the receipt. So we debit cash, we credit dividend receivable. There are times that these dates uh, will fall only on one particular date. So the date of declaration, including the date of payment, is considered the same date. So if it's the same date, your entry will only be debit cash, credit, dividend, income. So as you can see, guys, as to the effect, we only have here a dividend income. So there is no increase or decrease as to the carrying amount of investment. Therefore, the number of shares, including the cost per share, will not decrease because what we receive here is a cash which only increase our income. So again, please take note of the effect of a cash dividend. It will increase your dividend income, no effect on the cost or carrying amount of the investment, no effect on the number of shares, and no effect on the cost per share. So let's say, for example, ABC company declared a cash dividend of P2 pesos per share. 2A holds 20,000 shares of ABC company with carrying amount of 500,000 pesos. So if that is the problem, as you can see, we will only receive a cash dividend, 2 pesos per share. Okay, if ever our date of declaration and date of payment is different, then we will record that. How much is the amount of our cash dividend, amount of cash dividend to be received? And that is equal to 2 pesos per share. How many shares do we hold? We hold 20,000 shares. So 20,000 shares times 2, we will receive 40,000 cash dividend. That's how we will measure our cash dividend. Now, it depends on your journal entries on the date of declaration and date of payment, or rather, the date of declaration and the date of payment is the same. So as you can see, we will only record here a dividend income amounting to 40,000. Now, this dividend income, again, will increase your income, but as to other items, it does not affect. Next, we have your property dividend. So this type of property is this type of dividend is a dividend in kind. Why is it a dividend in kind? Because you will receive a property instead of cash. Now, how do we measure it? So we measure your property dividend based on the fair value of the property to be received. Based on the fair value of the property to be received. So whatever is the fair value for your property to be received, that is the amount of your property dividend. Now the question again here lies as to the effect of this type of dividend to your dividend income, to the carrying amount of the investment, also as to the cost per share and the number of shares. Okay, so as to dividend income, your property dividend increases dividend income. As to cost or carrying amount of the investment, it does not affect. Number of shares, it does not affect. Your cost per share, it does not affect. So property dividend is almost the same with your cash dividend. The difference solely lies on the measurement. So for example, ABC company declared a property dividend 2A will receive inventory with carrying amount of 30,000 and fair value of 80,000. So how should you record the amount of the dividend received at the fair value of the property received? And the fair value is 80,000 pesos. Now lies the recording of this 80,000 pesos. When do we record it? Again, we have your date of declaration, date of record, and date of payment. On the date of declaration, you can already record that. You debit dividend receivable, you credit dividend income, 80,000. And on the date of payment, once we receive the inventory, we debit inventory, and then we credit dividend receivable, 80,000 pesos. Okay? So how do we measure it again? We measure it based on the fair value of the property to be received. Next type of dividend is known as your stock dividend. Next type of dividend is known as your stock dividend. So under your stock dividend, we compare whether the stock dividend is same with those held or different with those held. So what is a stock dividend? A stock dividend is a type of dividend in which you will receive shares of stock. You will receive shares of stock. So remember, you are an investor. And being an investor, you are also holding shares. You are also holding shares. Now, if you will receive shares of stock, you need to know whether the shares to be received is the same or different. So for example, you are holding ordinary shares. So if you will receive the same ordinary shares, no problem. But if you receive a different type of share, let's say you will receive a preference share instead of your ordinary share, so that is a different type of stock dividend. So we need to know how to account for this stock dividend in case the stock dividend is same with those held or different with those held. So let's start first with the stock dividend, same with those held. So how do we measure your stock dividend? The stock dividend here will not be measured, meaning it is not recorded through a journal entry, but only through a memo entry. So it is not measured, it is not recorded through a journal entry, but only through a memorandum entry. Now, since we will only record it through memorandum entry, we need again to determine the effect of this type of investment as to the dividend income, the number of shares, and the cost per share. So as to the dividend income, what is the effect of your stock dividend? No effect. Cost or carrying amount of the investment? No effect. Number of shares, it will increase. The cost per share, of course, will decrease. Why will your number of shares increase? Because again, you will receive shares. Because you will receive shares, of course, your shares should increase. And because of that increase in shares, but no change on your cost of or carrying amount of investment, your cost per share will decrease. Let's say, for example, you are holding 20,000 shares, ordinary shares of ABC company with carrying amount of 500,000 pesos. ABC company declared 10% stock dividend. Okay. So here, let's assume that the stock dividend is the same with what we hold. So we have here 20,000 ordinary shares. We will receive 10% stock dividend. So multiplied by 10%, what is the amount of your stock dividend? 2,000 shares. So we have here your original shares of 20,000. We have your stock dividend, 2,000. So total of 20,000 ordinary shares. So what happened? from original of 20,000, it became 22,000. So there is an increase as to the number of shares. Let's check as to your cost per share. So in your cost per share, it is computed by getting first the cost and then getting the number of shares. And then you divide the cost over the shares. So our cost, we say it will remain at 500,000 pesos because that is the carrying amount. Now, as to the number of shares, so initially, our number of shares is 20,000. Now, it is 22,000. So, to compute for your cost per share, we have here 500,000 divided by 20,000. So, we have here 25 pesos per share. How about the second one? We have 500,000 divided by 22,000 shares. We will get an amount equal to 22.73 pesos per share. So notice what happened to the cost per share because of the stock dividend. The cost per share decreased. The cost per share decreased due to the stock dividend. So no dividend income, no change as to your cost or carrying amount of investment, but the number of shares will increase and the cost per share will decrease. Okay, so that's for your stock dividend. That is the same with those held. Remember, you will only record here a memorandum entry. So what is your entry? Receive 2,000 new shares or ordinary shares as stock dividend from ABC company. So that can be your memorandum entry. So you will only record it through memo entry, through memo entry. So another type of your stock dividend is a stock dividend different from those held. A stock dividend different from those held. So what if we will receive a stock that is different from what we hold? So we have OS, but instead of receiving OS, your dividend will be PS. So how do we treat that type of dividend? So we treat this type of dividend as a decrease. So how do we measure? It will be treated as a decrease on the carrying amount of the original investment based on the relative fair value of the shares. Okay, so there will be a decrease on the carrying amount of the original investment based on the relative fair value of the shares different from those held. Right? So we will decrease the amount of our investment based on the relative fair value allocated on the new shares, which is different from those held. Okay, so let's determine then the effect of this dividend as to our dividend income, the cost of the investment, and the carrying amount or number, cost or carrying amount of investment, number of shares, and cost per share. As to dividend income, we have no effect. As to cost or carrying amount of your investment, so we have your old investment, of course, will decrease. New investment will increase. The decrease in your old investment should be transferred to your new investment. Therefore, if you have here a new type of share, generally your entry is debit investment in equity securities, the new shares, and then you credit investment in equity securities, the old shares. Because again, the decrease on the old investment will be an increase on your new investment because of the shares different from those held. As the number of shares for the old, no effect. For the new, of course, it will increase. For your cost per share, the cost per share of your old will decrease, but as to the new, of course, it will increase. Why is there an increase? Because you have a new share from zero to the new value, from zero shares to the new shares. Now, let's have an example. So 2A holds 20,000 ordinary shares of ABC company with carrying amount of 500,000. ABC declared to 2A 2,000 preference share. 2,000 preference share. The fair value of ABC shares are, so we have here OS and PS. So let's say for OS, it has a value of 40. For PS, it has a value of 100. Now, what is the effect we need to get for the value of the, or relative fair value of the PS and the OS? And then we need to allocate the value, and then we remove the allocated amount from the carrying amount of the old investment. We transfer it to the shares different from those held. So I hope you still remember how to share or allocate the value using relative fair value. So get first the relative fair values of OS and PS. So for OS, you have 40 pesos per share multiplied by 20,000. This will give us 100,000. For PS, we have your 2,000 shares multiplied by 100. We have 200,000. So the relative fair value is 1 million. This is 8 over 10, 2 over 10. And then we allocate the whole carrying amount based on the relative fair value. So what is allocated on OS? 400,000. To PS, 100,000. So based on the allocated fair value on the PS, we need to remove that on the amount of our OS. So we debit investment in equity security PS, 100,000. We credit investment in equity security OS, 100,000. So as you can see, the effect in your investment, it will decrease. So let's look. We have here your OS, you have your PS. We have now your carrying amount. So your carrying amount before is 500,000. Now it is only 400,000. Where did we get 400,000? Based on the relative fair value. Therefore, the carrying amount decreased. On your PS, you have a zero value, but now it is 100,000. It is increased. So your PS value now increase. Take note that the decrease in your OS will increase your PS. So the 100,000 decrease in OS increase the PS by 100,000. As to the number of shares. So in your OS before, we have 20,000 shares. Now it's still 20,000. On your PS before it is zero, now we have 2,000 because of the stock dividend. So what is the effect on your number of shares in PS? Increase. How about on your number of shares OS or the old shares or regional shares? No effect. Now we go with your cost per share. So before it is 500,000 divided by 20,000. So we have 25. Now it is 400,000 divided by 20,000. It is 20 pesos. So what is the effect of your stock dividend different from those held as to cost per share? It will decrease. From 25 pesos per share, it is now 20 pesos per share. How about in your PS? Before it is 0, 0, therefore the cost per share is 0. Now it is 100,000 divided by 2,000. Now it is 100,000 divided by 2,000. So our cost per share is 50. So cost per share as to your PS is 50. So let's take a look back into our diagram before. Okay, so this is our diagram. We said as to dividend income, no effect. You already know that one because there will only be a transfer from the old investment to the new shares held. And then as to the cost or carrying amount of the investment, we say on your old, it will decrease. On your new, it will increase. So here, ayan. Next, as to number of shares, as to your old, no effect. As to your new, increase. And as to cost per share, as to your old, decrease. As to your new, increase. Okay? So again, in accounting for dividend, we do not need, we should not only look into the effect of these items as to dividend income. You should know the effect of these items as to its cost per share, the carrying amount of the investment, or the effect as to the number of shares. Why is this important? It is important because normally problems will not ask you a particular dividend type question. It is normally comprehensive. It includes all types of dividend, and you need to determine the ending balance of the carrying amount or the carrying amount of the investment, the ending number of shares, what is the cost per share, and what is the total dividend income. In that case, you need to know all of the effect of that particular type of dividend as to those items. Because if you do not know the effect, therefore, you will not get it correctly. You will not get it correctly. And normally, I'm telling you now, for your equity securities subsequent transactions, questions are always comprehensive. Rarely do you see what is the amount of the cash dividend to be recorded. That's not the question. It will always be what is the total amount of dividend income, what is the ending balance of the investment, what is the number of shares held by the investor at the end, and what is the cost per share. So questions will only revolve on those items. So you need to master the effect of these different types of dividend as to these four items. And of course, you should know their measurement. So even if you know how to account for it, if you do not know the measurement, wala lang din. Wala lang din. Okay? So we're done with three types of dividend already. So we finish cash, we finish property, and we finish stock dividend. We proceed to another type of dividend. So we have here a liquidating dividend. What is this liquidating dividend? A liquidating dividend is a type of dividend out of capital. This is what I told you a while back as a dividend return of capital. Return of capital. So in this particular type of dividend, how do we measure it? Amount of cash or property received as liquidation and decreases the carrying amount of the investment. So why does it decrease the carrying amount of your investment? Because again, this is a return of capital. So unlike a pure cash or property dividend, what is the entry again? We debit cash or property, we credit dividend income. Diba? Ganyan yung entry natin. Pero pag liquidating dividend, it is considered a return of capital. Therefore, it should decrease the carrying amount of the investment. So in case you receive cash or property as liquidation, you debit cash, you credit your investment in equity securities. So here, there will now be a decrease on the carrying amount of your investment. Now, because of this, we need to know what is the effect of the liquidating dividend as to our dividend income, as to the carrying amount, as to the number of shares, and as to the cost per share. As to dividend income, no effect because it is not considered an income, but it is considered a return of capital. As to the carrying amount, what is the effect? The carrying amount is decreased because, again, there is a return of capital. As to the number of shares, generally no effect. Cost per share, it will now decrease. Cost per share will decrease. So why will cost per share will decrease? Take note, your carrying amount decrease without a change on your number of shares. Therefore, your cost per share will decrease. So for example, so 2A holds 20,000 ordinary shares of ABC company for 500,000 pesos. ABC declared a liquidating dividend to 2A amounting to 100,000 pesos cash. So how do we record that? We debit cash, we credit investment in equity securities. Pwede nyo rin namang ilagay dyan ABC para mas madali ninyong ma-account pagka. Okay. So cash investment in equity securities, the amount of liquidating dividend, 100,000 pesos. So debit cash, credit investment in equity securities, 100,000 pesos. So we look as to the effect of dividend income. So walang naka-record na dividend income, therefore no effect. So your carrying amount, before it is 500, you will decrease it by 100. It is now 400,000, therefore decrease. As the number of shares, before it is 20,000, now it's still 20,000. Now, as to the cost per share, we look at it. 500,000 divided by 20,000 will give you 25. 400 divided by 20,000 will give you 20. So there is a decrease out of your cost per share, resulting to the decrease in your carrying amount because of the liquidating dividend. Resulting to the decrease on your carrying amount because of the liquidating dividend. Okay, so that's for liquidating dividend. We need to look as to the effect on your dividend income, carrying amount, number of shares, and your cost per share. We go now to another type of dividend. So number 5, we have your cash in lieu of shares. Cash in lieu of shares. So in this particular type of dividend, cash in lieu of shares means you receive cash instead of share. You receive cash dividend instead of shares. So meaning the original dividend here is a share dividend. However, what you receive actual is a cash. So how do we account for this? So the measurement of your cash in lieu of shares, we follow the as if approach. So what is this as if approach? As if the shares to be received were sold to receive the cash. As if the shares to be received were sold to receive the cash. Therefore, since there is an as if sale, we need to compute for the gain or loss on sale. We need to compute for your gain or loss on sale. So how do we compute for your gain or loss on sale? First, you need to compute for the cost per share with the stock dividend. And then we compute the cost of the stock dividend. So how to compute that? Is stock dividend multiplied by the cost per share. And then we compare the cost versus the cash received to compute for your gain or loss. Now, it's still the same. We need to look as to the effect on your dividend income, as to your carrying amount, as to the number of shares, and as to your cost per share. As your dividend income, it does not affect, because take note, this is a share dividend. And a share dividend, we do not record a particular entry on the recognition. It will only be through a memorandum entry. So no effect on your dividend income. As your carrying amount, of course, it will decrease. Number of shares, no effect. As your cost per share, it will increase or decrease. It will also decrease due to the new value of the shares received. Okay. Sir, why is there no effect on your number of shares? Because for example, you have 20,000. You will receive 2,000 shares. Eventually, you will sell the 2,000 shares. So this will be 0. So the net effect will still be 20,000. So the number of shares, take note, no effect. Number of shares, no effect. Now let's look and account for, let's have an example and account for a cash in lieu of shares. Cash in lieu of shares. So 2A holds 20,000 ordinary shares of ABC company with 500,000 pesos carrying amount. ABC company declared a 10% stock dividend on ordinary shares on the date of payment to A receive assumption letter A. Let's say to A receive 40,000 and then 2A receive 60,000. Okay? So 2A holds 20,000 ordinary shares of ABC Company with 500,000 carrying amount. ABC Company declared a 10% stock dividend on OS. On the date of payment, 2A received 40,000 pesos cash and 60,000 pesos cash. So instead of share, what we actually receive is cash. We call this one cash in lieu of shares or cash instead of shares. Since what we receive here is the cash, take note again, we account as if there is a sale to compute for any gain or loss. So how to compute for your gain or loss? First, you compute for your new cost per share. To compute for your new cost per share, you get for the carrying amount, you divide it to the original shares plus stock dividend. So our carrying amount is equal to 500,000. Our original shares is 20,000. We have a stock dividend equal to 10%. So 10% of 20,000 is 2,000. So 500,000 divided by 22,000 will give us 22.73. And then we get for the cost of the stock dividend sold. To compute for the cost of the stock dividend sold, we compute for the stock dividend multiplied by your cost per share. So the amount of our stock dividend is 2,000 shares. The cost per share is 22.73. So 22.73 multiplied by 2,000 shares will give us 45,460. 45,460. So for letter A, we will receive 40,000 cash. So to compute for the gain or loss, we first compute for the selling price, which is 40,000 cash, versus the carrying amount of 45,460. Therefore, we have here a loss. We have a loss amounting to 5,460. So how do we record that loss? Of course, we record the cash received, which is 40,000. We remove the investment in equity securities relating to the cost of the stock dividend sold, 45,460, and we record the loss on sale amounting to 5,460. Okay? So that is if in case it is a loss. For assumption letter B, we are to receive 60,000 cash. We compare again your selling price to the carrying amount. So the selling price is 60,000, the carrying amount is 45,460. So we have here 14,540 as a gain. So how do we record that? We again record the cash to be received, 60,000. We remove the investment in equity securities relating to the stock dividend sold. That is equal to 45,460. And the difference of 14,540 will be recognized as a gain on sale. Okay, so take note, if that is a cash in lieu of shares, we have here a gain or loss on sale. If that is a cash in lieu of shares, we have a gain or loss on sale. To compute for the gain or loss on sale, again, first we compute for the new cost per share, and then we compute for the cost of the stock dividend sold. Then we compare that cost or carrying amount to the selling price or the purchase price. Sir, what is the selling price or the purchase price? The selling price or the purchase price in this particular problem will be the amount of cash to be received. That is 40,000 or 60,000. And any difference now will be accounted as a gain or loss on sale. Any difference will be accounted as gain or loss on sale. Let's resume. So our next type of dividend is your shares in lieu of cash. shares in lieu of cash. So here again, we need to determine the original type of investment and type of dividend and the actual dividend received. So in your shares in lieu of cash, the original dividend that we will receive here is a cash dividend. However, what we receive is share. Okay. How do we measure it again? We measure it using your as if approach. And what is your as if approach? Under your as if approach, it is treated that as if the cash to be received is used to purchase new shares. As if the cash to be received is used to purchase new share. So the problem here is the measurement of the shares received. The problem here is the measurement of the shares received. So here, since we receive here a share, we look into the difference between the cash to be received at the date of declaration and the actual amount of shares. Okay, so how do we measure it? So the measurement actually lies in this particular priority. So what is the priority? First, the fair value of the shares. Next, as to the cash dividends to be received. Now take note, at the date of declaration, you will record a dividend receivable credit dividend income. At what amount? This is the amount of the cash to be received. This is the amount of the cash to be received. Now guys, since that is the amount of the cash to be received, then initially, yan yung i-record mo. But on the date of payment, ang mangyayari kasi makaka-receive ka ng bagong shares. So you debit investment in equity securities, you credit dividend receivable. But again, how do we measure this investment in equity securities? We measure it at the fair value of the shares and the cash dividends. Problem now arises if there is a difference as to the initial cash to be received and the fair value of the shares. No problem guys if the fair value of the shares is not given. Kasi nga, i-measure mo na lang siya doon sa amount ng cash dividend. Paano kung yung fair value of the shares is given? Then, you need to account for the change in the initial cash to be received depending on the fair value of the shares. So you need to look as the difference of the two. And this change will be accounted as an increase or decrease in the dividend income. So let's look as to the effect of your shares in lieu of cash. So as to dividend income, it will increase your dividend income. Now, as to the cost of investment, it will also increase your cost of investment. As to the number of shares, it will also increase your number of shares. As to your cost per share, this depends as to the fair value of the shares received. So whether it will increase or decrease the cost per share. So let's have an example. 2A holds 20,000 ordinary shares of ABC company with carrying amount of 500,000 pesos. 2A holds 20,000 ordinary shares of ABC company with carrying amount of 500,000 pesos. ABC declared 2 pesos per share cash dividend. On the date of payment, 2A received 1,000 ordinary shares. The fair value of the ordinary shares is, let's say, letter A, not given or not determinable. Letter B, 50. Letter C, 30. Okay. So 2A holds 20,000 ordinary shares of ABC company with carrying amount of 500,000. ABC declared 2 pesos per share cash dividend. On the date of payment, 2A received 1,000 ordinary shares. The fair value of the ordinary share is not determinable. Letter A, letter B, 50, letter C, 30. Again, on the date of declaration, how do we record it? We record a dividend income equal to the cash to be received. At the date of payment, you will record investment in equity securities according to this priority. First, on the fair value. If no known fair value, the cash to be received. And any difference will either increase or decrease the dividend income. So yun lang yung kailangan nating tandaan dyan. Date of declaration, you record dividend income equal to the cash to be received. On the date of payment, you measure your investment in equity securities at fair value or at the amount of cash to be received. And any changes on the fair value and the cash to be received will either increase or decrease the amount of our dividend income. The amount of our dividend income. So let's answer letter A. So we do not have any value for your fair value of shares. So on the date of declaration, we will make an entry, debit dividend receivable, credit dividend income. The dividend income here is equal to your 2 pesos per share. So 20,000 shares times 2 pesos per share, 40,000. Date of payment, we will receive the investment. So we will record the investment in equity securities. How? First, at fair value. Fair value given? No. Therefore, we will record it at the cash to be received, 40,000. And then we remove the dividend receivable, 40,000 pesos. That's for letter A. Letter B, what if the fair value of the shares is equal to 50? On the date of declaration, you will have the same entry. You have the same entry. On the date of payment, what is your entry? Again, we debit investment in equity securities at fair value or cash to be received. So since given yung fair value, you record it at fair value. 50 pesos per share multiplied by 1,000 shares. How much? 50,000 pesos. You remove dividend receivable. You remove dividend receivable amounting to 40,000. There is a difference of 10,000. Sabi natin, the difference of 10,000 will either increase or decrease your dividend income. So this will be your dividend income. Okay? So in short, if you're asked, what is the dividend income in your shares in lieu of cash? Pag tinanong, what is the dividend income in shares in lieu of cash, ang sagot nyo, it's either the fair value or the cash to be received. So dito, dividend income natin equal to the cash to be received. Dito, equals sa fair value. Bakit? Diba initially, we have dividend receivable. Tapos meron tayong dividend income, 40,000. So dito, meron tayong 40,000 na dividend income. Tinaasan natin ng 10,000, magiging 50,000. Yan yung kanyang fair value. So pagka tinanong, what is the dividend income? Actually, the dividend income here is based on this. Based on this. Although, ang sinasabi ng standard, you should measure it that way. But then, again, if you look at it at the end or pagkatapos lahat nung pagka-receive mo nung new shares, ang effect niya talaga, ang dividend income mo is equal to either the fair value or the cash to be received. Let's look on letter C. On letter C, the fair value of the shares is equal to 30. So at the date of declaration, we will record again dividend receivable, credit dividend income. 30, that is 20,000 times 2, the amount of cash to be received, 40,000. And on the date of payment, we will record an investment in equity securities equal to the fair value. So 30 times 1,000, 30,000. We remove the dividend receivable amounting to 40,000. So mababawasan, no? Ang kulang kasi ngayon is yung debit. So mababawasan yung dividend income. How much? 10,000. So in short, how much is the dividend income? Dividend income is equal to the fair value of the shares. That is 30 times 1,000, 30,000. Or kung maglo-long cut ka, initially may 40,000, babawasan mo ng 10,000, kaya naging 30,000 lang din. In short, sabi ko nga sa inyo, pag tinanong ang dividend income sa shares in lieu of cash, it is equal to the fair value or the cash to be received. It's equal to the fair value or the cash to be received. Okay, so we made a comprehensive example as to whether it is not determinable in case the fair value is higher than the initial amount, in case the fair value is lower than the initial amount. Okay, so take note, guys, for your dividends, what are the items that we need to know? Of course, you need to know how to measure the dividend. That's one thing. But again, you need to know the effect as to your dividend income, the effect as to your cost or carrying amount of the investment, also the effect on the number of shares, including the cost per share. Okay, so to summarize, we have here the effect on dividend income, the cost or carrying amount, the number of shares, and the cost per share. We start first with your cash dividend. We said your cash dividend increases dividend income, but it does not affect your cost of the investment. It does not affect the number of shares, and it does not affect the cost per share. Next, we have your property dividend. So under your property dividend, it will increase your cost of the investment. It will increase the dividend income, no effect on the cost of the investment. Now, as to the number of shares, no effect. Cost per share, no effect. So property and cash has the same effect. Now, let's go to your stock dividend. So same or different. So for stock dividend, same as those held. Dividend income, no effect. Cost of your investment, no effect. Number of shares. As to your number of shares, it will increase. Then your cost per share will decrease. For those different, we have your original shares and the new shares. For original shares, dividend income, no effect. New shares, no effect. We start first with stock dividends, which is different, or original shares. So original shares cost, what is the effect? It will decrease. Why? Because the decrease here will increase the new shares. As the number of shares, no effect. But as to the new, it will increase. Cost per share, of course, it will decrease because the cost decrease, and the cost per share of the new shares, it will increase. Next, we have your liquidating dividend. Under your liquidating dividend, as to the effect of dividend income, no effect. As to the cost, it will decrease. Number of shares, no effect. Cost per share, of course, will decrease. Next, we have your cash in lieu of shares. In your cash in lieu of shares, what is the effect on your dividend income? Dividend income here, no effect because originally we have a stock dividend. As to the cost of your investment, so as if the shares were sold to receive cash, that's why our cost will decrease. Number of shares, no effect. The cost per share will decrease. So look, cash dividend and property dividend has the same effect. Liquidating and cash in lieu of shares has the same effect. Next, we have your shares in lieu of cash. Shares in lieu of cash. If that is a share in lieu of cash, what is the effect on your dividend income? Increase. As to the cost of the investment, as to the cost of your investment, of course, it will increase. The number of shares will increase. Your cost per share will either increase or decrease depending on the fair value of the shares or the cash to be received. Because again, you measure this either at fair value of the shares or the cash to be received. Take note, what are we measuring here? The dividend income. We are measuring the dividend income. Guys, take note, questions will never ever ask a particular item regarding cash, property, yung isa-isa siya. Laging comprehensive yan. Kaya pag tinanong kayo, how much is the total dividend income? Ang may epekto lang cash dividend, property dividend, at saka shares in lieu of cash. Others, walang epekto yan. Ito yung mga problema ng estudyante, porke nakarinig ng dividend, income na daw agad siya. No, not all dividend has an effect on your income. Some dividends does not really affect your dividends. Some types of dividend does not really affect your dividend income. So what are those? We have these items. And take note, if that is comprehensive, they may also ask you how much is the total cost of the investment at the end or the carrying amount. So you need to look as to the differences. Why is this important? Kasi 'di ba, in getting the fair value versus carrying amount, kailangan makakompute ka ng gain or loss, tama? So pag mali yung carrying amount mo based on these items, mali din yung gain or loss mo. So dalawa na agad yan, di ba? Tatanong, what is the carrying amount before the adjustment on fair value? O pag hindi mo nakuha, edi mali. Pag tinanong again, what is the gain or loss on the change in fair value? Eh hindi mo alam yung effect niyan sa carrying amount, edi mali mo na naman. And of course, the effect on your number of shares and your cost per share. Ingat tayo sa mga yan. Ingat tayo sa mga yan. Okay? So, please study the effect. Although I know baka i-memorize nyo na naman to. Sana hindi nyo i-memorize. Sana magets nyo kung bakit it will increase the dividend income and why it does not affect your costs based on the journal entries. Based on the journal entries. Okay? So, again, these are subsequent transactions. Purely kasi ang diniscuss natin noon, carrying amount versus fair value. Wala pang nagbago sa carrying amount. Ngayon, dinidiscuss natin yung mga possibilities na magbabago yung carrying amount. Ayan na siya. So, dapat alam nyo yung mga effect niyan. Alam nyo yung mga effect niyan. Kasi, mamamali nyo yung gain or loss. Mamamali nyo yung gain or loss. Next topic, we have your share splits. So what is a share split or stock split? So when we say share splits, your shares held will be split to higher number of shares or lower number of shares. Your shares held will be split to higher or lower number of shares. It will be split on a higher, lower number of shares. So what do we mean if there is a split to higher and split to lower? So andito na yung concept ng split up at saka split down. Okay. So what is a split up? When we say split up, you have a higher number of shares. So for example, one share held will be replaced by 5 shares. So let's say you have 20,000 ordinary shares. If you have 20,000 ordinary shares and one share held will be replaced by 5 shares, in short, what you do is 20,000 divided by 1, yan, i-multiply nyo dun sa replacement niya. So magiging 100,000 shares siya. So from 20,000, naging 100,000. So there is an increase. Pagka-split down naman, it will be exchanged to lower number of shares. 2 shares held will be replaced by 1/2 share. 2 shares held will be replaced by 1/2 share. So paano naman to computein? So ito yung pang-divide mo, ito yung pang-multiply mo, di ba? So kung 20,000 yung shares mo, i-divide mo daw sa 2 kasi kailangan yan. So every 2 shares held, maging 1/2 lang siya. I-multiply mo dun sa kapalit niya, 1/2. So ilan na lang yan? 5,000 shares. So from 20,000 shares, naging 5,000 shares siya. So what is important with split up and split down? Again, we need to look as to the number of shares and the cost per share. Sir, bakit napaka-importante ng number of shares and cost per share? 'Di ba? Alam niyo naman yung pag-compute ng gain or loss. Magko-compute muna tayo ng cost per share, tapos yung shares sold multiplied by the cost per share. Kasi pag mali yung cost per share mo, guys, ay nako, mali din yung gain or loss on sale mo. Ito yung mga problema sa financial accounting. Parang nagdo-domino effect yung mga problems or yung mga questions. So in case, ingat-ingat talaga dapat tayo, lalo na pag comprehensive yan. That's why many students hate auditing problems dahil din doon kasi nagdo-domino siya. Okay? Kasi nagdo-domino siya. Now, we go with your tawag dito. We go now with the effect of the shares as to the number of shares and the cost per share. Number of shares and the cost per share. Okay. First, as to your number of shares. If that is a split up, what is the effect on your number of shares? Increase. Cost per share. Of course, since the number of shares will increase, the cost per share will decrease. Kasi nga, inverse yung relationship nila. Next, we have your split down. Split down. So under your split down, your number of shares will decrease. Your cost per share naman now will increase. Your cost per share now will increase. Okay? That is as to split up and split down. So halos lahat yung mga dinidiscuss natin dito, we look as to the effect para at least alam ninyo mag-compute ng gain or loss, yung mga values niya at the end. That is for your share split. So it's either split up or split down. So split up, higher number of shares. Pagka split down, lower number of shares. So ang gagawin ninyo, yung shares held nyo, tapos yung exchange rate niya, kumbaga, parang 1:5 kasi yan. 1 share mo, magiging 5. 2 shares mo, magiging 1/2, parang ganun. So, split up or split down. Next, special assessments. So under your special assessments, what do we have? Under your special assessments, what do we have? Generally, special assessment is a term under your taxation or under your law in case the value of a property increased because of the improvements made by the government. So, for example, this is your property, liblib na lugar yan. Tapos nag-build agad si government dyan ng national highway, so nadaanan yung property mo. And because of this particular road in which kaharap niya lang yung property mo, the value of your property skyrocketed. So nag-increase siya. So ang gagawin ng government, the government will assess you special assessment because of the increase on the value of your real property. That is a special assessment. So here, your special assessment in the concept of your investment in equity security, we take a look at it like a property which increase its value. And because of that increase its value, the investee demands additional amount. So the investee demands additional amount. Now, our problem, how do we account for this demand of additional amount? How about if ever we have your investee demands additional amount? If the investee demands additional amount, then the effect here is considered a special assessment. And in that way, the difference or the additional demand is considered as also an additional investment. So, kumbaga, this will increase the carrying amount of your investment. It will increase the carrying amount of your investment. So, if you are assessed, for example, because of that additional amount, then you will debit investment in equity securities, and then you will credit your cash as the payment of that additional investment. So for special assessment, it is considered as an additional investment increase on your carrying amount. So it is more applicable for properties, especially under our law, for real properties increase, the government assess those properties, special assessment, due to the effect of the government projects or infrastructures near your property. But here, if you take a look of your special assessment in your investment in equity security, it is as if that the investee demands additional amount due to the increase in the value of your shares held. And because of that, you need to provide additional amount considered as additional investment. Because we treat it as an additional investment, it will increase the carrying amount. So our entry, investment in equity securities and your cash. Okay, so no problem with special assessments. In case there is a special assessment, increase lang agad yung carrying amount. Now, we have your derecognition or sale. So how do we compute for your derecognition or sale? Again, we get for the selling price, we compare the carrying amount. You already know how to compute for the carrying amount. We get for the number of shares sold multiplied by the cost per share. Kaya mag-ingat kayo dito sa cost per share. Once na mali nyo yan, mali din agad tong gain or loss on sale nyo. So that will give you your gain or loss. So if the selling price is greater than the carrying amount, therefore we have a gain. But if the selling price is lesser than the carrying amount, therefore we have a loss. Therefore, we have a loss. Okay? So that's it for our derecognition or sale. Last topic. Last topic here, we have your stock rights. Now, this is my problem in your stock rights. I don't know what to use, but I am inclined of not using accounted for separately. Parang mas gusto ko yung not accounted for separately. And whenever I read the standard, there's no clear pronouncement talaga when to use it accounted for and not accounted for. Later, I'll discuss why I am more of non-accounted for rather than accounted for. Para sana wala ng gulo, di ba? Pwede sana siya both accounted for, not accounted for, FVTOCI, FVTPL, di ba? Okay, so a brief background regarding stock rights. Before, in our stock rights accounting, the problem will always tell us whether it is accounted for separately or not accounted for separately. But with the introduction of PFRS 9, it is unclear on what to use, especially that we have now FVTPL and FVTOCI. Now, some academicians, okay, pangalanan natin. Si Valix, ang sabi niya ay not accounted for separately siya, whether FVTPL siya or FVTOCI. Pero actually, binabawi niya lang din yun at the end. So parang sabi niya, you account for this, I am more inclined, let's wait for the future blah blah blah. Ganun siya. Ganun si Valix, sabi niya. So wala siyang paninindigan sa not accounted for separately. Joke lang. Next, we have Sir Milan. Under Sir Milan, the accounting depends on whether it is FVTPL or FVTOCI. I don't know actually because hindi ko na siya maalala. But I think yung isa dito not accounted for, tas yung isa accounted for, parang ganun. So parang FVTPL accounted for, FVTOCI not accounted for. Tas yung mga ibang textbooks naman, they still present not accounted for separately and accounted for separately without mention on when to use it. Kasi si Valix, at least sinabi niya, you can use not accounted for separately, either FVTPL and FVTOCI, isa lang. Kay Milan naman, you can use AFS for one only, not accounted for separately for one only. While for other textbooks, you can use not accounted for separately or accounted for separately, whatever type of stock right is that. Whatever type of investment, you get that particular stock right. But I am more inclined actually on not accounted for separately. I'm just sharing my input on this particular topic. So in this not accounted for separately, why? Because in accounted for separately, what we do is we separate. So we have here the cost of investment. So that cost of investment will be separated for the investment in the equity security, the actual investment, and the investment in stock rights. So hahatiin mo yung cost of investment. Okay, stock rights. Hinati mo siya. Hahatiin mo siya for equity security and investment stock rights. Ganyan pagka accounted for separately. Pag not accounted for separately, magstay siya as investment in equity security. It will stay as investment in equity security. If it will stay as investment in equity security, then ibig sabihin, wala kang mineasure na stock rights. Now, we go to the definition of your stock rights. A stock right is a right to purchase shares at a specified price at a specified period. So, may mabibili kang shares at a particular price within a specific period. Ganun siya. So take note, right. It is a right. There's no obligation. There's no obligation. There's no obligating event. There's no obligating event. Since there's no obligating event and there's no probability that you can really measure or you will own that stocks, then why should you measure it? Diba? Parang wala ka naman talagang probable na oh, sa akin yung stock na yan. Right? Unless lang guys, that you will really exercise it. But then again, another feature of a stock right kasi is its feature of being capable to be sold to other parties. Pagka kasi ang problema naman na sasabihin sa akin is, 'di ba pwede naman siyang ibenta? So pag ibenta mo siya, edi anong mangyayari? Walang babawasan, gano'n. Kasi yun yung mga main misconceptions nila. Since this is a right, then dapat para sa akin, wala kang i-measure kasi wala ka naman talagang asset at all. Pero 'di ba pwede mo yung ibenta? So kahit naman pwede mo siyang ibenta, unless you can measure the probable economic benefit, then you can only account for that as an asset. Because again, take note, we need to go back to the definition of an asset. But then, sabi nila, uh, you would rather want to separate it so that at least pag binenta mo, you can account for the gain or loss. But actually, even if naman na hindi mo siya i-separate, you can still account for the amount you receive. Since dito kasi sa not accounted, it is more of an embedded derivative and I would rather choose it to be an embedded derivative. So kumbaga pag embedded derivative yan, pag binenta mo, direct reduction siya. So dito kasi magkakaroon ng gain or loss. Dito sa not accounted for separately, pagka direct reduction siya, mababawasan lang yung carrying amount. Ganon yung magiging effect niya. So, yun. Para sa akin, it's more of parang not accounted for separately. It does not really provide for a definition. It does not fall for the definition of an asset. Especially, you cannot really measure the economic benefit reliably. But then, they say you can still account for the two. Anyway, they are the authors of their books. So antayin na lang natin yung pronouncement or interpretation ng ating standard setting body if ever they will interpret. Okay? So for today's discussion on stock price, I will only discuss the difference of the two. But again, I will not include it on your quizzes, nor I will include it on your exams because until now, it is unclear. Hopefully, by the time that you take the board exam, there is already a clear guidance as to the accounting for stock price, when to use it and when not to use it. As of now, we do not know when and when not to use it. Therefore, we cannot really make our own interpretation of it. And we cannot lean on one particular understanding of an author and another understanding of an author because it will only create confusion. So we would rather want na lang to wait for it. So for today, I will discuss the stock price by looking into their differences, but I will not provide again a quiz, particularly a topic coming from stock price or included an item of your exam as a part of your stock price or an item from your stock price because again, it will be unfair for you because we do not really have a particular guidance yet as of this moment. So again, we will just discuss it. So let's look into the differences. So Accounted for separately and not accounted for separately. Again, when we say accounted for separately, what do? We separate from the cost, the stock price, and the cost of the equity investment. In not accounted for separately, it is not separated. It is not separated. Just take note of this concept. Accounted for separately, that's why it's called accounted for separately, we need to separate. You're not accounted for separately, since it is not accounted for separately, then we do not separate. It is more of an embedded derivative. So it's like it derives its value only to that particular stock, but it does not stand alone as an asset. Parang ganun. Okay, so what are the important transactions that we look into? First, on the issuance of stock rights. On the issuance of stock rights in accounted for separately, since we will separate it, we debit investment in stock rights, we credit your investment in equity securities. The question is, at what amount? So we measure this as to the fair value of the stock price. We measure it based on the fair value of the stock price. If that is not accounted for separately, so we do not separate it. We will only make a memorandum entry. We will only make a memorandum entry. That's as to the issuance. Now, as to the exercise, what do we mean by the exercise of stock rights? When you say exercise of stock rights, diba, you have the right to purchase shares at specified price at a specified date. If you will already exercise the stock price, meaning bumili ka na talaga ng shares. Bumili ka na talaga ng shares. So when the stock price is exercised, your entry here is debit to investment in equity security. You credit cash for the payment. This is the strike price. Strike price atang term doon. Or the price is stated whatsoever. And the investment in stock rights. Okay, so here, since you will already exercise it, the cost of new investment is equal to the cash paid plus the stock price exercise. Kaya merong investment in stock price dyan. Kasi di ba, una, hiniwalay natin. But since exercise na natin, tanggalin mo na rin yung investment in stock price. Paano naman sa not accounted for separately? Madali lang siya. Investment in equity securities, you credit cash. Ganun lang siya. So, ano yung difference naman nila dito? Yung cost of new investment is only equal to your cash paid. Okay? So, kasi kanina, tinignan natin, di ba? Kanina kasi tinignan natin, doon sa AFS, yung cost of new investment is equal to cash paid plus stock rights. Dito sa not accounted for separately, only the cash paid. Only the cash paid. Another difference as to the sale of stock rights. As to the sale of stock rights, whenever there is a sale of stock rights, nasabi ko kanina, di ba? Here in your accounted for separately, we account for gain or loss. We account for gain or loss. We compare the selling price versus the value of stock rights sold. Here, there will be no gain or loss. So what is the entry then? In the sale of your stock rights. So we debit cash, we credit investment in stock rights. So if you have a loss, you debit it. If you have a gain, you credit it. But in not accounted for separately, I told you a while back, when I explained my reason why I want not accounted for separately, whether it is FVTPL or FVTOCI, I told you that there's no gain or loss, but again, since this is embedded on the asset, you directly deduct it to the amount of your investment. So your entry here is debit cash, credit investment in equity securities. So as you can see, the effect of the sale is a direct reduction on the amount of our investment. It is a direct reduction on the amount of our investment. Okay? Next difference. Expiration of stock rights. So what is expiration? Remember, you can only purchase at a specified date. So what if you do not exercise it within the specified date? Here in accounted for separately, the expired rights is considered a loss. The expired rights is considered a loss. Then what is our entry? You debit loss on stock rights. You credit investment in stock rights. Here, in your not accounted for separately, you will only make a memo entry that it is already expired. That it is already expired. Okay? So, kung papansinin ninyo, parang, di ba, parang mas okay talaga yung not accounted for separately. Aside from mas madali siyang i-account, mas magigets mo yung reason bakit hindi natin siya pwedeng tanggalin dun sa asset. Pero yung accounted for separately, parang hindi kasi ako na uh, I am not persuaded by the fact that you can measure an asset that is not actually yet an asset. So there's no probability. And actually, when we measure your asset, it must be very certain. Must be very certain. It is not probability. You will remember. You will know this one when you come to IA2. When you measure a liability on when you record it, you only look whether it is probable. While in your asset, you need to look at it as certain. It must be certain because here you are recording an economic benefit, unlike a recording of an outflow of economic benefit. Mas kasi 'di ba accounting, alam niyo naman 'to, mas okay sa accounting na nababawasan yung ating assets rather than dinadagdagan. Concept of prudence. So parang gano'n, parang gano'n. But anyway, we just discussed the difference. And I will not provide any questions relating to this one, even theoretical, because I don't want to ask questions relating to a topic that is not clear up to this particular moment. So, yeah, we just look as to the difference for now so that you will be guided soon in case lumabas na talaga kung paano siya gagamitin.